What is going on, guys? It's Thomas here, and this week we'll be discussing the differences between negative and positive gearing. So negative gearing is a term generally thrown around by the media, and a lot of people don't understand what this term actually means. So first we'll cover what is gearing. So gearing basically means borrowing money to be able to purchase a property. So you go to the bank for a deposit, and the bank will give you a certain amount to borrow, and you'll pay back an interest rate on this, and this is what gearing actually is. So when people are talking about negative gearing, this means that the property's income and rent does not actually cover the expenses of that property. So today we'll use an example of a property worth $500,000. So you're looking to purchase a property of $500K, you have a $100,000 deposit, your monthly interest repayments and mortgage repayments of the property is $1,920, and the weekly rent is $400 per week. So every month you would be out $320 per month. So that means that you have to take $320 out of your own pocket to pay off the expenses of that property. So we'll discuss the benefits of negative gearing and why people do choose to negatively gear properties. So the major benefit of negative gearing is the fact that this loss that is taken on the property, the monthly expense taken out on the property to pay off the mortgage repayment, is tax deductible. So how it works is, say you're out by $320 per month, you'd annualize this payment to be roughly $4,000 a year, and you'd reduce your taxable income by $4,000. So it is a tax benefit. In Australia, you can reduce your taxable income by your investment loss. And that's one of the major reasons why people do negatively gear properties. Another reason why people do choose to purchase negatively geared properties is the fact that the majority of high growth areas, such as the Sydney CBD and Western Sydney, do not have many positively geared properties due to a low net rental yield. So what that means is that the rent in these areas is not high enough to cover the mortgage repayments of the property. However, these areas do have a higher capital growth than other areas. So people like to put their money in these areas because they know it's a safer investment in the long term. There is obviously people moving into the areas, reason for infrastructure and investment in the areas, and therefore you'd see the demand of these properties increase over time, increasing the property prices over time. So the main reasons why people do invest in negatively geared areas is because, number one, taxable income decrease, and number two, these areas are generally high capital growth, so they're looking for high capital growth and yield over time rather than short-term positive cash flow. The major negative of negative gearing is the fact that each month you will be out of pocket, so the property will need to be topped up. Every month you'll be putting more money into the property, and that is the major negative of negative gearing. The fact that it isn't passive income, it is income where you won't receive the income until you go to on-sell the property in the future, or if that property does eventually become positively geared, you will have to continue to put more money into the property. The other downfall of negative geared properties is the fact that it is extremely hard to service more than one negatively geared property. So if you've got 3 or 4 negatively geared properties, it's extremely hard to be able to put $300 a month into each of the 4 properties for perpetuity. It is hard to be able to service loans and to borrow more money in the future from banks if they see that you do have highly negatively geared properties. So now we'll discuss positively gearing and what positive gearing is. So basically it's the complete opposite. The income from the property pays off the mortgage repayments and the expenses and some. So each month you'll be netting profit from the property. So each month you'll be putting a little bit more money into your pocket. And this is what passive income is. It's income where you don't have to put your hands on anything, no work is involved. It's money you accumulate from the investment that you've originally put in through the deposit. So that's the major benefit of positively gearing, the fact that you are receiving money each month, you are profiting from the property. This money is to be taxed, which people see as a negative, but I mean it's money that you weren't going to earn otherwise, so I don't see why that's a negative. I'd rather have more money in my pocket than have to put more money into another property. And the other major benefit of positive gearing is something we did touch on a bit earlier, the fact that you are able to service more than one property. So you can continue to increase your property portfolio. The banks will be more inclined to borrow to let you borrow money from them because you are obviously servicing your previous properties. And the extra cash flow that you have from the property can also be used on further deposits on other properties. The major negative of positively gearing is the fact that it is extremely hard to find positively geared properties in high growth areas. So a lot of the high savvy investors will pick up these properties before they even hit the market. So if you are looking to find a positively geared property, it is most likely to be in low capital growth areas, so areas that are not in such of a high demand, looking out in the country. That is one negative of positively geared properties, the fact that you may not receive the same capital growth over time as one that would be negatively geared. The other negative of positively geared properties is the fact that you may need to put improvements into the property to be able to make it positively geared. So you may need to do a reno or improvements on the property to make the rental return higher. So in terms, it could cost you more money in the startup. But that is another negative to taking grant if you aren't be able to find a positively geared property. If you're trying to create one, it will cost you more than just the deposit originally. So that's it, guys. Negatively geared and positively geared properties. I myself am a fan of positively geared because of the fact that I like to earn more money and I don't like putting money out of my pocket every month. So that's it, guys. Thanks for tuning in. Make sure to smash that like button and we'll see you next time.